This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Well, at the end of our first session on VAT, I left you to finish off example 1. Now, again, what we had to do was to work out the month end by which date we will have exceeded the £85,000 compulsory VAT registration limit, and to move from there on to state, well, by what date must we notify HMRC of our requirement to register for VAT, and of course the date then that Orchid, here the company, the trader, will be registered with effect from. Okay, now as we can see, we start with fairly low numbers. So you add through 1 month, 2 months, 3 months, June, July, August, and you keep on going. You keep on going as far as the first 12 months are concerned. Now, given that you started on the 1st of June 17, by the time you get to the 31st of May 18, that's your 12 months up. So at that point, you had not exceeded the 85,000 compulsory VAT registration limit. Indeed, at that point, I think we got that there would have been £64,400 worth of taxable supplies made. So we're still some distance away from the 85,000 over the preceding 12 months. Then all you have to remember to do, when you move to the next month, as we said, we are adding in 11,800. We're taking out, as we now move, it would now be 13 months from the date we started to trade. We only look back over the previous 12. We take out the previous June 17. So when we work out, therefore, the effect of that, we're deducting 3,900 from this figure, and we're adding £11,800 to that figure. What does that then come to? Well, we're still a way short. We're up now to just £72,300, so still no requirement to register for VAT. Then what does it, of course, is we move on to July 18, we take out July 17. So we've moved out June 17, we take out July 17. So to the 72,300, add 17,500, take out 3,900. And I think, at least if my arithmetic is correct, that takes us up to £86,000. So by the 31st of July 2018, we have exceeded the £85,000 compulsory VAT registration limit. So what will then have to happen? We must notify HMRC within 30 days. So within 30 days of 31st of July, that would equal, I seem to remember using these dates before, the 30th of August there of 2018. Within 30 days, so by the 30th of August. You'll then be registered with effect from which month? Well, from the first day of the second month following the month, here July, at which point you've exceeded the £85,000 limit. So a couple of months on from July will be September. So in terms of the date you'll be registered from, that of course will therefore be the 1st of September 2018. Okay, so there, using the historic test, we are able to determine the point at which you must register for VAT. You've exceeded the £85,000 limit by the end of July 18. You have 30 days, so to the 30th of August of 18, to notify HMRC, and then you will then be registered with effect from the 1st of September 18. Now there, we called it the historic test based on historical turnover. But as we'll now see, moving on to looking again at compulsory registration, but here in section 1.2, we now have a future turnover test. Now again, it's linked to the £85,000 compulsory VAT registration limit. But what we're now looking at is not going back in time, but looking literally at what's going to happen during the following 30 days. So if a trader must also register for VAT if that trader is going to have taxable supplies that will exceed £85,000 during the following 30 days. So at any point where the trader sees that they're going to be making taxable supplies that will exceed £85,000, within the following 30 days, they are now required to register for VAT. And this is regardless of any taxable supplies preceding this 30-day period. It is purely what is happening in the next 30 days. Again, that figure of taxable supplies that we're talking in terms of is the figure before, exclusive of VAT. But if that figure is going to exceed 85,000 in that next 30 days, then HMRC must be notified. And when must they be notified? By the end of the 30-day period. The trader will then be registered, note here, from the beginning of that 30-day period. So all those sales, all those taxable supplies, they really are taxable, and you have to charge VAT thereon. So at any point in the next 30 days, taxable supplies will exceed 85,000. You must notify within that by the end of that 30-day period, and the trader will be registered from the beginning of that 30-day period, requiring therefore VAT to be charged, VAT invoices to be issued. We'll talk more about those later. And they must be issued for any sales made during that period. We've got a very simple example now. Tulip Limited commenced trading. So we commenced trading on the 1st of April 18, so nothing has gone before this. And its forecast income is, well, there you go, £90,000 per month. The company's sales are all standard rated. Now, it wouldn't matter again whether it was a mix of standard rated and zero rated. If taxable supplies are going to exceed 85,000, then there is the requirement there for us to register for VAT. State the date that Tulip must notify HMRC by and the date from which the company will be registered. So the start of that 30-day period is the 1st of April 18. Therefore, we've got to notify by the end of that 30-day period. That will therefore be the 30th of April 18. 30th of April 18, and they'll be registered from the beginning of that period. So from the 1st of April 18, we're going to be VAT registered, and therefore the sales made will be subject to VAT. They're taxable supplies, and VAT must be charged thereon. Okay, just a little testing exercise to bring both of those rules together. Let's assume now that our trader commences trading on the 1st of July 18 and is going to make sales, all of which are taxable supplies, as follows. July, let's say £30,000. August, let's say £50,000. Right. Now, by this date, at this point in time, the end of August, would there be any requirement to register for VAT? Well, the historical turnover test, 30 plus 50, that's 80,000. We have not exceeded 85,000 within the preceding 12 months. In terms of the future turnover test, at the beginning of July, we were not foreseeing sales in excess of 85,000. Beginning of August, we were not foreseeing sales in excess of 85,000 either. So the future turnover test did not apply either. But then, in September of 2018, we're then budgeting to have sales of £90,000. So, what does that mean now in terms of VAT registration? Until about 4 minutes ago, we only knew about the historical test. The historical test would have said, we've got 80,000 over the previous 2 months, plus 90, well, of course, that's 170. We're well in excess of £85,000. We're double that limit indeed there at 170,000. So using the historic test, that means that we would have to register within 30 days of the end of that period. So that would be the 30th of October, and then would be registered with effect from the 1st of November. But is that going to apply here? No, it's not, is it? because now what's going to come before that or those dates, what we now have is that at the beginning of September, we were budgeting for £90,000 worth of sales, in which case it is the future turnover test that applies. So using the future turnover test, at the 1st of September, for the next 30 days, we are budgeting to make taxable supplies in excess of 85,000. The future turnover test applies. Therefore, we must register within that 30-day period. So by the 30th of September, and registered with effect from, if I can use that brief abbreviation there, the 1st of September. Now that very clearly is well before the 1st of November. So here it's the future turnover test that will apply, not the historic, because at the start of September, in the next 30 days, we foresaw £90,000 of taxable supplies, and that meant, therefore, the future turnover test applied. Okay. Now, that is where we have seen that there is no choice in the matter. Compulsory VAT registration applies there. Now, we don't have to wait around until the compulsory VAT registration limit applies. For what we may be able to do, it may seem odd for us to do it, but voluntary VAT registration is possible. So a trader may decide to voluntarily register for VAT where taxable supplies are below the £85,000 registration limit. This will be beneficial when. Now, it need not necessarily be beneficial other than if we look at this example here, if we cross out all of that other information, if we get rid of that, and we see in this example that when we were budgeting, we could see that it was only going to be a matter of months from the time we started trading on the 1st of July 18 before we would have to compulsorily, I should say there, or try to anyway, register for VAT. And what does that mean? It means that, though I could wait around until September before registering for VAT, and all of those sales would be brought in, it means only these first couple of months of sales would be exclusive of having to charge any VAT. The prices are going to go up by 20% come September there, something I can't avoid. So if it's going to happen anyway, what the business may well decide to do is to register for VAT, maybe here from the day they start trading, before they have to. That means that the normal prices, inclusive of VAT, will therefore have to be charged. And what does that mean? It means that the prices are not going to then jump by 20% in a few months' time. So we're going to, again, sell our products inclusive of VAT right from the word go. Why would we choose to do that and not take a couple of months' worth of advantage there? Well, the reason for that, of course, would be that we don't want to miss our VAT registration date. You're going to be busy here running that business. Well, if you don't quite get it right in terms of the sales figures, what may happen is you miss the date. And if you miss the VAT registration date, you're going to be in trouble, because what that means is that we could end up with penalties and fines through having missed the VAT registration limit. So to avoid that risk, we register before we have to. So voluntary VAT registration, therefore, is available to you so long as you make taxable supplies. There must be some taxable supplies that are being made. If you don't make any taxable supplies, then you cannot register for VAT. Not a question of voluntary or compulsory. You can't. There must be taxable supplies. But before they get to the level of the compulsory registration limit there, you may choose to go early, as it were, and voluntarily register for VAT. But this point then makes the statement that it would be beneficial to actually register for VAT in either of these two circumstances. Firstly, now we said that the taxpayer must be making taxable supplies. Well, what about if the trader makes zero-rated supplies? If we make zero rated supplies, our prices won't change. It's plus 0% VAT. So this is not disadvantage or disadvantageous in terms of the market that we're in and the customers to whom we seek to sell. The price is not going to change as a result of registering for VAT. But by registering for VAT, input VAT will now be able to be reclaimed. But no VAT will be charged on the zero rated outputs. So it doesn't change your sales prices. It won't affect your profitability from a sales revenue point of view. But now, input VAT, if you register for VAT, will be reclaimed. You'll get back 21/20ths of the current costs that you are incurring, therefore reducing your costs, reducing your expenses, and thereby increasing the profit. This, therefore, would be a very good idea to register for VAT, even though you don't have to. Okay, just to prove that, we'll have now a little example. Again, we'll set that up for you in a moment's time, so you might want to pause just at this point. We'll set that up for you and we'll work through that together to illustrate how in such a situation the business, the individual or the company may be better off, will be better off as a result of registering for VAT.
Okay, let's have a look at an example then of where the level of taxable supplies that we have is below the compulsory VAT registration limit, so we don't have to register for VAT but can choose to do so if we want to. The reason being that we make taxable supplies, but then that those taxable supplies are actually zero rated. So, a little example. If business makes taxable supplies of £60,000, excluding VAT, but we have standard rated purchases and expenses of £30,000 inclusive of VAT. So how would we calculate the profit? What would our profit be if we were not registered for VAT? Well, if we're not registered for VAT, the sales are £60,000 and our purchases expenses, what we pay, expenses incurred, will be the full £30,000. So our profit will be £30,000. We sell for £60,000, there is no VAT, we are not registered for VAT, but we incur costs of £30,000 inclusive of VAT. If we're not VAT registered, we cannot recover input VAT. Therefore, sales 60, cost of sales 30, profit 30. What would happen then if we registered for VAT and, as we said, the sales that we make are zero rated? Well, if they're zero rated, the sales will still be how much? £60,000. We're VAT registered now, but the VAT is at a zero rate. The sales figure doesn't change. But what about our cost of sales now? Well, now our cost of sales is going to be reduced because now we'll be able to recover the input VAT. The input VAT will be 21/20ths of the cost incurred. So the cost of sales will be 100 over 120 times the £30,000. That therefore, 100 over 120 times 30 will be, do check, but I think that will be 5/6. 100 over 120 of 30,000 will be 25,000. So our profit figure will now be 35,000. The issue being that we can now recover the input VAT on those sales of on those purchases and expenses of 30,000 inclusive of VAT. What is the VAT? Times 20 over 120 equals 1/6 of 30 equals £5,000. Therefore, by registering for VAT, we can get the money back. Our costs, therefore, will be reduced to 25,000. That means our profit is now 35,000. That's the point, therefore. If, although you do not have to register for VAT, if you make zero rated sales, you have zero rated outputs, but have standard rated inputs, your sales income won't change. Here it's £60,000, but now your costs will be reduced from 30 down to 25 because you can recover the input VAT of £5,000 that you've suffered on VAT inclusive costs of 30,000. Your profit will increase by 35,000. Now that's the main reason why, if you didn't have to register for VAT, you could choose to register for VAT and be better off as a result. Therefore, the extra time it takes and the extra costs that, yes, you will incur in terms of now registering for VAT and having to submit those VAT returns is made worthwhile as a result of being able to recover that input VAT.
Well, I've seen one situation where it is beneficial to actually register for VAT where you don't need to. There's now a second scenario as well. And again, like with the first situation, as we've just explained, making zero-rated supplies but having standard-rated inputs, it's all about the ability to recover input VAT, which you can only do if you are registered for VAT, without adversely affecting your sales. Where you make zero-rated supplies, becoming VAT registered makes no difference at all. There is no extra price to charge. Now, you might think that, therefore, if we make standard-rated supplies, that we've got a real problem. But if now the trader does make taxable supplies, so it says supplies there, but these are taxable supplies, and they are standard-rated supplies, so you're going to be charging an extra 20% on the sales price. You would think that immediately puts you at a disadvantage in terms of you are now 20% more expensive than you were. But that won't be the case depending on who you are selling to. If your customers are themselves VAT registered, they are VAT registered businesses, a business to business rather than a business to ultimate consumer sale here, then if your customers are themselves VAT registered, then what is output VAT to you is input VAT to them. And if they make taxable supplies, then the input VAT that they suffer on what you now charge them, a VAT inclusive price rather than exclusive, they will be able to recover the input VAT. So in which case, therefore, there's no change in their net cost. If I'm selling to a customer £100,000 worth of goods plus VAT at 20%, then it means that I charge them £120,000, 100 plus 20% VAT, and they then immediately claim back the input tax that they have suffered on that purchase of 20,000. So their net cost is £100,000. Just like if I wasn't VAT registered, I sell it to them for 100,000. Their net cost is the same £100,000. So input VAT will be reclaimed, and it should be possible to charge output VAT, therefore, on top of what was your pre-VAT registration selling price. Again, it's because the output tax will be recoverable by the customers there. Now, this is only going to work where we're selling to another business. It's a VAT registered business. If we are selling to the general public, then we have a problem. They are the ultimate consumer, and that therefore means that we become less competitive because our prices, if we're going to make the same return on our sales, have just become 20% higher. This is not good news. But in this situation, we're actually at no disadvantage. Again, we get the advantage out of being VAT registered. We reduce our costs because we can now recover the input VAT rather than suffering the cost of the input VAT. And we still maintain our same set level of sales revenues without impacting on the sales price. Good news. Okay. We'll have a little example now in relation to this just to prove those numbers as we did with the first situation. So we'll just set that example up now.
Okay, let's have a little look at our example and seek to illustrate the benefit here of voluntary VAT registration in a situation where the business makes sales that, if registered for VAT, would be standard rated sales, but makes those sales to other VAT registered businesses, while of course incurring costs of sales, purchases and expenses from other VAT registered businesses, and therefore our costs are inclusive of VAT. So same numbers as we had before. Trader makes taxable supplies of £60,000 exclusive of VAT, and we have purchases and expense costs of £60,000 £30,000 inclusive of VAT. So sales 60,000 at this point exclusive of VAT. There is no VAT to charge at standard rate because we're not yet VAT registered. But we have costs of sales of 30,000, which is inclusive of VAT. So customers, we've said, are VAT registered and they make taxable supplies. Right. At the moment, therefore, in terms of sales to our customers, if we're not VAT registered, then the sales are just £60,000 on our statement of profit or loss. There is no VAT to charge. Sales are 60,000. Our cost of sales, we're not VAT registered, so as before, we cannot recover the input VAT, the 21/20ths of 30,000. We cannot recover that input VAT on our VAT inclusive costs. So our cost of sales are 30, the profit will be £30,000. What we're now suggesting, therefore, is that the trader will register for VAT and will add, therefore, 20% VAT to sales. Now that would mean that the customers would now have to pay not 60,000, but 60,000 plus 20% VAT, i.e. £72,000. That therefore would be more expensive. Now immediately we think, well, is that going to be a problem where our customers now have to pay us £72,000 where otherwise they'd have paid us 60,000? Well, it might seem like a no-brainer. Of course, they would not want to pay £12,000 more. But the customers that we're talking about are VAT-registered businesses making taxable supplies. But the customers will be able to reclaim the input VAT, which is now charged on the purchases that they make for us. So they'll be able to reclaim, therefore, the input VAT of £12,000, that being 20% of £60,000. They will now be able to recover that input VAT. So their net cost will remain at £60,000. Their net cost remains at 60. They immediately pay out the VAT inclusive figure of £72,000, more expensive, but immediately recover what is now the input VAT thereon of 12. So their net cost remains at 60,000. So our customers will not be adversely affected by us now charging not 60,000 but 60,000 plus VAT. We still end up with £60,000 net revenue. Their net costs are still £60,000. So for now, our trader's statement of P&L, if we now register for VAT and we charge VAT on the sales of 60,000, our net sales revenue is still 60,000, the VAT exclusive figure. But look at the difference now on our input costs. Our cost of sales will now be 25,000. We're still paying out 30,000. But once we're VAT registered, making taxable supplies, what can we do? We can recover the input VAT. Therefore, our net cost will be only £25,000. So our profits have gone up by £5,000 to £35,000.
Well, in our discussion of voluntary VAT registration so far, we've seen the two main benefits that can derive from actually choosing to register for VAT. The main benefit to be found is that in relation to your costs, your expenses incurred, that you're able to recover the input VAT. That means that your net cost is reduced in relation to what you actually suffer and what will go through your statement of profit or loss there. The idea being that if you are paying £12,000 inclusive of VAT in terms of costs and expenses, then if you're VAT registered, you can recover the 21/20ths, the £2,000 of input VAT suffered on that gross purchase cost of £12,000, reducing therefore what would have been a cost of £12,000, what you actually paid for those goods or those services, those expenses incurred, reducing that cost of 12 down to a mere £10,000. The problem with VAT registration is the requirement then to charge VAT. Well, that would push up your prices by 20%. On that basis, you'd be less competitive If you are now VAT registered and having to charge 20% extra to maintain the same sales revenue as compared to your competitor business that is not VAT registered. But we've seen now the two situations where there actually isn't a problem. Because either firstly, the trader makes zero rated supplies as stated there, of course, and as we've previously discussed, and therefore there is no output VAT to account for. So you don't increase your sales prices and you reduce your net cost of your expenses, you increase your profit. If, of course, you make standard rated supplies, as in this situation here, but we make them to VAT registered customers, then our VAT registered customer will not suffer the gross cost of what they pay us for our goods or our services, because they will be able to reclaim that input VAT that they suffer. Our output VAT is their input VAT. So yet again, we can still maintain the same selling price. We put the VAT on top of that. It doesn't cost the buyer any more because they get to reclaim our output tax as their recoverable input VAT. So again, we're getting the benefit of maintaining the same level of sales revenue while reducing the costs, all of which is therefore going to increase our profits. But if, of course, the charging of VAT does make you less competitive, because either you are selling to members of the public, individual customers, or to other businesses that are not themselves VAT registered, then we have a problem. So as it says here in Part B, it will probably not be beneficial to voluntarily register for VAT where customers are members of the general public, as such customers cannot recover the output VAT charged, so their costs have just gone up by 20%. If selling prices cannot be increased, therefore, the output VAT will become an additional cost to the business. The idea being there that if we can sell for a maximum of £60,000, then without registration for VAT, your sales revenues, the money you receive that is yours, is £60,000. But if you then went on and registered for VAT, but only received the same sales revenues of £60,000, this time inclusive of VAT, then your net sales would, as we know, a calculation we're very used to, would be 100 over 120 times the 60,000, and that, of course, would be 50,000. You'd be losing £10,000 of your sales revenues in VAT. You wouldn't get any extra on top of your 60,000. You've still got to sell to the customer. What they pay to you is £60,000. What you get to keep out of that is not now the full 60, but only £50,000. The only advantage you would have is that you'd then be able to recover the input VAT in relation to your expenses. But on a basis we trust that your revenues are bigger than your costs, you are still going to be worse off as a result. This, therefore, is not a good idea. Now, of course, if our sales rise to such a level that we go above the VAT registration limit, then you don't have any choice. Then, of course, you must charge VAT. So in relation to a little decision-making exercise that the examiner could put your way, and will be illustrated in the forthcoming example 3. Let's just have a little look at this note here. Whether or not output VAT can be passed on to customers will also be an important factor in deciding whether to remain below the VAT registration limit, or whether it's beneficial, or whether it is indeed beneficial to accept additional work that results in the limit being exceeded. Now, you think, of course, that the more sales, the better. But not, of course, if it means that we're going to lose 21/20ths of those sales revenues figures. And let's see how that would work now in relation to example 3. And this might be a typical exercise that you could be required to do within an examination question. The requirement to determine here if it's beneficial for Vine Limited to put up its prices. You might be asked, of course, to compute what net profit the business would have, either with or without that registration. And that's what we're basically going to see. Right, what are we told? Vine Limited has been in business for a number of years. All of its sales are standard rated and are to the general public. The company is not registered for VAT, so if we were registered, they'd be standard rated taxable supplies. But of course, at the moment, while our taxable supplies lie below the £85,000 cut-off level, there is no requirement to us to register for VAT. And that's the situation at present because our annual income is £80,000. Now, the company is planning to put up its prices, and this will increase annual income to £87,000. There is, however, no further scope for any price increases. No further scope. Therefore, that's it. 87 is the maximum revenues that we can charge our customers and still maintain that level of sales without losing customers again. Vine Limited standard rated expenses are £4,800 per annum, inclusive of VAT. So what we've got to look at here is what is the situation before we increase those prices? What is the situation where at the moment our annual income is £80,000? What profit are we making? Now at £80,000 we're not VAT registered. So our sales, £80,000. So sales, 80,000. This is our current position here. Current position, sales, 80,000, minus what are our costs? £4,800, inclusive of VAT. We're not VAT registered. We cannot recover the input VAT thereon. So we suffer that full cost of £4,800. Our profit, therefore, will be £75,200, methinks. All right, that's the situation at the moment. But then we're going to put up our prices. And if we put up our prices, we are going to have to suffer the cost of the VAT because we can't charge that level of sales plus another 20%. So what the question tells us, and this is as it would be worded within any exam question, that it will increase annual income to £87,000, but there being no further scope for any price increases, that means that that £87,000 is going to be deemed to be inclusive of output VAT that we will have to pay over to HMRC. So what now would be the profit? Well, this time our income, instead of being a net 80,000, the calculation now that we're used to, will be the total sales revenue is £87,000, inclusive of VAT. So times 100 over 120 will give us the amount of net sales revenue that we get to keep. And that, as you can see, has brought it down to only £72,500, well below the £80,000 revenues that we're achieving at the moment. What will our expenses be? Well, here there is some small benefit to be derived because our VAT inclusive expense cost was £4,800. That now will be reduced because we'll be able to recover the input VAT thereon, and that will come down to a VAT exclusive sum of £4,000. We'll get back the £800 worth of input VAT. But when we take 4 from 72.5, we're of course now looking at only, what's that, 68,500 as our net profit. 68.5 compares unfavourably with £75,200. That therefore is a decrease in net profit from 75.2 down to 68,500 of, I think, 75.2 down to 68.5. What's that, about £6,700? So we will be looking at a decrease in profit through VAT registration of £6,700. Answer, therefore, don't do it. As simple as that. Okay, so we've now looked at the situation where we have no choice. Compulsory VAT registration is required. And again, perfect territory in relation then to objective testing questions. And again, testing out by what date have you reached that VAT or exceeded rather that VAT registration limit? By what date must we then register for VAT? By what date will we be registered with effect from? Now, again there, be careful how the same scenario can ask for different dates, different points in time. Is it the end of the month at which you've exceeded the £85,000 VAT registration limit for a period of 12 months there? Is it the date by which you must register for VAT, some 30 days after the end of that month? Or, of course, is it the date that you'll be registered with effect from? The first day of, well, a month, 2 months on from when you exceeded that VAT registration limit. Again, go back to the examples that we did. But when looking at an exam question, you could have the same setup, same scenario, but any of 3 different answers depending on exactly what the requirements are. Read those requirements very carefully, please. Make sure you do not misinterpret. Always a potential problem with objective testing questions. Answer the question that has been set, not the question you think has been set there. Make sure you've read it, you've understood it. Be very careful. Okay, well, we'll bring this particular session to an end at this particular point in time and just pick up on a couple of other little issues about VAT registration, the point at which you do register for VAT. There's something called pre-registration input VAT, and do you reach a point where, having registered for VAT, actually you may then deregister. So those are the next couple of things, plus lots more to come, of course, in relation to VAT here in our next session together.